Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. Okay, so let's make a full breakdown of the situation that we currently have on CAD JPY. Now, why do I want to speak about CAD JPY? Because at the moment we do have quite interesting price action and structure for a potential opportunity. So as usual, I will be providing a complete multi-time frame top-down analysis. First, I will be speaking about the technical aspect of this market. Then we will go and see what we have from an order flow perspective. So basically checking the commitment of traders, which is what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential setup on the pair. And as usual, I will keep this as educational as possible. Starting here from the monthly time frame, what we can see is that at the moment we have just entered inside of an extremely strong monthly supply zone. In fact, from here the market had started all this move to the downside, and at the moment we're testing this exact same supply, and we also are testing it after a quite strong impulse. So definitely the market is quite overextended, and since we are also testing supply, we do expect the market to provide a deeper rejection. So here in the monthly, everything seems quite bearish, and we can expect the market to provide a rejection to the downside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we currently have at 0.382 of the Fibonacci taken on this monthly impulse, which is currently lining up exactly at this area that we do expect the market to test before a potential rejection to the upside. We can also see how the market has printed this candle here, so a candle with a very long wick and a red body that you do expect the market to fill in to the downside before then providing a rejection to the upside. So also here in the monthly, everything seems quite bearish, and we can expect the market to fill in this wick and provide a continuation to the downside. Going down on the weekly time frame, what do we have? Now here in the weekly, we can see how the market in 1 day and 11 hours will close. And since at the moment we are testing this red candle here, this red candle is currently acting as supply and resistance. In fact, if inside of an impulse to the upside, there is only one candle which is not related to the move, like for example this red candle here, it means that this area is a strong structured zone. And since the market is currently approaching this structured zone from the downside, it means that this area is currently acting as supply and resistance, meaning that we can expect the market to reject this zone to the downside. Additionally, if we will actually have a close like this, so with a red body and a very long wick in 1 day in 11 hours, there is a quite high probability that we can see the market provide a continuation to the downside, filling in this wick. So definitely also the weekly time frame seems quite bearish. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what do we have? Now here in the daily time frame, I have spoken about a cadjpy a couple of times in the past. I spoke about cadjpy after the market had provided this move to the downside. From here, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the upside, and in fact, that is exactly what the market did. Then from here, I made another breakdown explaining all the reasons for which, after the market had provided this M pattern, we wanted to see the market provide this move to the upside to complete the pattern at this previous support turned resistance. And we can see how that is exactly what the market has just created here on cadjpy. And by the way, I will link these two previous analyses in the description so you can go and check them out for further reference and more free education. Now, Before I show you what we have here on the daily and what kind of situation we have, let's first go and check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. Now, if we check the CAD, we can see how lately the CAD has been getting stronger. In fact, we went from having 2.4k net positions to having 43k net positions. However, there is a very important thing to say. It has already been 3 reports in a row that we see thousands of longs getting closed on the CAD, meaning that if we will now start to see also shorts getting added, it means that we could easily be at the top of the monthly uptrend as we have already seen, because obviously we are inside of that supply that we have identified at the beginning of the video. And if we go and see what we have on the JPY, we can see how the JPY has quite weak net positions with minus 53k, with 87k shorts and 34k longs. So the JPY is weak. However, we can also see how 11 longs got added with the last report, meaning that we are already seeing longs getting added, which could lead to a retracement in the weakness of the JPY, which means a strong JPY that, combined with a potential weak CAD, as we have already discussed, would easily bring this market to provide a rejection to the downside. Specifically because here on the daily, we are also testing quite strong previous daily support, which is now turned resistance, and we also have an impulse and a correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. And if we do that, we can see how we are currently testing the 0.786 of the Fibonacci taken on this daily impulse, which is lining up with this previous support and resistance, creating a confluence of resistance that we do expect this market to reject to the downside. So how we can be approaching a potential shorting opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And as soon as the market will shift from an intraday bullish to an intraday bearish market, at that point, we will be adding cadjpy to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside, and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to provide and create a lower low. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.